We got earnings figures to digest and plenty more where that came from when it comes to the week ahead. Hello, everyone. Monty here, market analyst at IGUE. And as always, going to go ahead and have a quick recap in terms of what happened last week, digest some of those financial heavyweight earnings before we take a look at the week ahead, plenty on when it comes to data, as well as when it comes to earnings, and then a deep dive when it comes to Tesla. That's later in this video. Now, Wednesday, we had their CPI last week, and that was the core was stickier than expected. But afterwards, let's just say that the pricing data was much more favorable. I want to say producer prices, contractions month on month, year on year dropping from the headline from 4.9 to 2.7%, definitely in direction with what Fed wants to see. And take a look at trade pricing data. Export and import, both month on month and year on year, negative readings. Look at that, negative 4.8 and negative 4.6% year on year. And all four, by the way, were lighter, i.e., better in the current inflation environment, better than expected. The one thing, though, that the Fed doesn't want to see is that consumer inflation expectations. Now, the 5-year was out of U of M at 2.9% unchanged, but the problem is when it comes to 12-month, it was under 4%, jumped to 4.6%. I want to say that from the economic data that we got, including retail sales contracting, it's not adjusted for inflation, contracting by 1%, core down 0.8%. Claims disappointed. It was worse than expected, and 239K, even if continuous claims was slightly later than expected, around 1.8 million. I want to say that all this data pretty much is in line with what the Fed expects, with the exception of consumer inflation expectations. But I want to go ahead and take a look at what happened on Friday with those financial heavyweights. JP Morgan, now we know that rates are high, but at the same time, the rates that they're giving out to clients aren't nowhere near as high. In fact, the gap between the Fed funds rate and what banks like JP Morgan are giving consumers, it's far higher than what we see out of, say, the Eurozone when it comes to the deposit rate at 3% and what banks are giving, which is around, say, average roughly to 2.3%. So long story short, net interest income surged. It was a record first quarter revenue strong earnings, and they even raised their forecast for net interest income to over $80 billion for this year. Wells Fargo also beat, by the way, seeing companies beat, it usually shouldn't come as a significant surprise, just because a lot of times the analysts, what they'll do is they'll kind of keep the expectations lower so that when the company comes and beats, it juices the markets. We see this big risk on move, and everybody seems to win. But lighter beat, setting aside more funds for potential losses, and they cited was a U.S. commercial real estate, auto loans, as well as credit cards. Citigroup deposits did drop quarter on quarter, but they did see significant inflows when it came to March after the whole Silicon Valley Bank crisis, and that's kind of in line with what we saw in terms of regional banks suffering and a lot of those flows going towards those larger banks. And another thing to note when it comes to this is that we're looking at financial heavyweights. It is going to eventually, it's going to be the turn of those regional banks to start posting their figures, and that's where the real test is going to be when it comes to financial sector and for credit conditions in general, just because you have a lot of those on the regional front that are relying on those banks to provide that credit. When it comes to the week ahead, though, we got some U.S. housing data is going to be spread throughout the week. You got the manufacturing indices, both Philly, which is going to be on Thursday. You got for the New York Empires, which is going to be later today. And then we've got global manufacturing and services PMIs. They're going to be on Friday, where for the U.S. expected to remain in sub 50 contracting territory. By the way, all this stuff, it's going to be in the week ahead on the report, the link of which is going to be in the description. Also going to be an additional link to the article on Tesla's earnings preview. We're going to get some more Fed speak. Now, we did hear from Waller. Let's just say he was came off as quite hawkish late last week, talking about not having made, and I quote, made much progress in terms of bringing inflation down to their 2% target, with sideways movement in the underlying and wanting further tightening. That's not just further tightening, but it's going to, and I quote, need to remain tight for a substantial period of time and longer than markets anticipate, end quote. And that means now markets pricing heavy majority, around 80%, according to Refinitiv, that they're looking at one final 25 BP rate hike out of the Fed at the beginning of May, but they're still optimistic about rate cuts in the fourth quarter of this year. Let's see whether or not that's going to pan. Also going to be on the fiscal policy front. We've kind of forgotten about the debt ceiling. Well, we shouldn't forget about it because we're creeping towards the end game, and we're expecting the House Speaker to speak today. Whether or not there's going to be whether or not it's going to resume talks or standoff, whatever the case may be, bond market, that's something they're going to have to note. Earnings, I will get to the next slide. And globally, we got a string of Chinese economic data tomorrow morning. GDP is included, and the People's Bank of China expected to keep rates on hold on Thursday. Today, we had the MLF. They kept it on hold at 2.75%, and the liquidity injection was lighter than anticipated, so maybe they're a bit more optimistic about the readings that they might get tomorrow. But otherwise, when it comes to pricing data, we are in the current inflationary environment, so everyone is no doubt going to be noting that. For Canada, you also have for the UK on Wednesday, that's going to be an important one. For the Eurozone, everyone focuses on, because they've got the preliminary readings, that's the one that usually causes more market movement. I wouldn't worry too much about these final figures that are going to be released on Wednesday. For New Zealand on Thursday morning, and then for Japan on Friday. So what about when it comes to earnings? Got more financials, including from heavyweights. Bank of America is an interesting one, but then also those that have more exposure to M&A, where it's been a bit lighter, a bit tested in the past year. Goldman Sachs and Morgan Stanley. You got consumer staple giants like Procter and Gamble, Johnson and Johnson, and then it comes to the FANG plus MT stocks, which are very popular amongst you all. Not just Netflix tomorrow, but the big one, the most top traded stock here at IG. I want to say consistently, not just once or twice, but almost always you'll see it. If not number one, it's one of the top 3 traded stocks. That's Tesla, which is going to be on Wednesday. So let's go ahead and take a look in terms of what to expect, what the expectations are, courtesy of Refinitiv. The expectation for earnings per share is going to be 80 cents. This is lower than the fourth quarter and also lower than the first quarter of last year, where it was $1.07. Revenue, though, expected to be higher compared to the first quarter of last year at $23.3 billion. Now, deliveries, these figures are not expectations. These were released before. They were a miss compared to what analysts were expecting. They came in at about 423,000, and there's still that gap to production. It's always been a matter whenever we look at Tesla that they would have. Before, the issue was that, they're going to have supply problems or, production hell, but that their supply creates its own demand was kind of how it seemed with Tesla, just because you had this strong demand. The problem is that are we facing a situation where they're going to need to do more in order to boost that demand? And when it comes to analyst recommendations, again, this is courtesy of Refinitiv, 16 on hold, 2 sell, 2 strong sell, 13 buy, 9 strong buy. So still overall, it was much more majority buy in the past. There's still slight buy, but you want to say there's a significant portion opting to hold when it comes to their recommendations. And you remember, this is a quarter where we had significant price cuts, and we've had sort of an EV electric vehicle price war. And that just means that we want to take a look at to what extent, how elastic is their demand? They've reduced prices by, for example, an average of 4 or 5%. Has that translated? To what extent is that going to translate into larger sales? And since we already know the deliveries, which let's just say didn't impress specifically at the upper end, at the higher end models where the margins are higher, the Model S and the Model X, there's also the matter of the cost. To what extent have they been able to reduce costs? Because that's really going to impact whether or not they're going to be able to beat when it comes to profit or not. And the fear is always going to be, especially when it comes to any investor, any trader, when it comes to a growth stock, you always want to make sure that if your growth, don't go X growth. I mentioned Netflix, their earnings are going to be tomorrow. If you recall, when they started to lose subscribers, they kind of went X growth, and we saw what happened to their share price. And that's always been a danger when it comes to them. If you're growth, don't go X growth. If you're a dividend stock, for example, which Tesla isn't, their growth stock, if you're a dividend stock, don't go X dividend. Otherwise, the shareholders are going to go ahead and punish you. Just want to go ahead and take a look at trader sentiment going into this event. You can see that they're holding this blue dotted line right here, by the way. That's retail traders. So traders in our IG client sentiment percent long. That's taking the left axis. You can see they're about 78% extreme buy bias, and they've been holding extreme buy bias for quite some time. Only when prices really went up back in the summer of last year, that's when we saw the sentiment dip and almost go majority sell, but they've pretty much been majority buy this entire time. I want to go ahead and pull up the IG trading platform. In this case, you can see that this is a weekly chart. So normally we take a look at a daily. This is a weekly time frame. It's been within a very, very large bear trend channel. No, it does not mean it's going to keep going down. I'm not trying to get the bulls all pessimistic on the matter, but from the technical standpoint, that's what we've been seeing so far. It's been within this very large bear trend channel, and just going back here, I want to go ahead and pull up, and these are the revised figures for this week. Technical levels don't hold much significance when we're going into a fundamental event, and earnings definitely is probably the fundamental event when it comes to a single stock. So the overview might be bear average, but you'll notice that when it comes to conformist and contrarian strategies, you do not fade the move. So when it reaches the price levels, you don't just go opposite. For those of you that think these levels are going to hold, you're supposed to wait for either reversal, or in the case of, for those going sells, for going for a significant reversal. So in other words, it breaches or breaks the level, and then only if it comes back after reversing significantly, then afterwards you can go ahead and for those considering to go opposite. Otherwise, those of you who think, no, these levels aren't going to hold, we're going to be shifting to a new territory, you can go ahead with breakout strategies, whether it's a conformist sell breakout off the weekly first support, or a contrarian buy breakout off the weekly first resistance level. So with that in mind, I want to thank you guys so much for watching. Good luck out there, and happy ticks.